Another update, broadly speaking, for U.S. equity markets. It was mixed most of the day, but taking a look at the December S&P futures at the CME Group, we finished the day positive. We were actually up 1%. 35.76.75 was the high in that December ES contract. The downside, you were only only down about 28 basis points at 35.31, which was only about $10 lower than yesterday's settlement. Finished the day up over 0.75%. It was a low volume rally, but it was a rally nonetheless. And since the lows made on October 30th, we are up 6 of the last 9 sessions for a total of 10.2% to the positive side. Now, the bear has basically been erased, not necessarily from a new high perspective. We saw that a few days back when the S&P December contract hit 36.68 for a new all-time high. That's not what I'm referring to. What I'm referring to is when you're looking at an index change, an index could be rallying, but underneath the breadth of the market or the vast number of stocks don't all have to be up. And what's happened over the last few days is the stocks that got hit in the S&P 500 the most in the pandemic are actually now leading. The sectors that lost the most have gained the most, which means from a stock by stock perspective, essentially the entire bear market has finally been erased, with every stock basically going back 2 levels for the most part in the S&P 500. Certainly sectors have all increased above or at least to where they were pre-pandemic. And then we're also looking at dollar strength, which over the last few months has not been a positive for the equity markets, but the dollar's up 1% in the last 4 days, even though over those last 4 sessions, we've been up 2 sessions, down 2 sessions. The up sessions have had a little bit more strength to them, not necessarily from a volume perspective, but from a change on the day perspective. So overall, S&P strength in the face of dollar strength, and the bear market, technically at least, is over for now.